Just to remind everybody, my 2-day comprehensive masterclass is on the 16th and 17th of June, Monday and Tuesday, Canary Wharf. If you're looking to pivot to another strategy in the property industry, looking to rinse out bigger profits, squeeze those assets harder, develop bigger, then this masterclass is for you. Hello everybody and welcome to my summer update. I cannot believe we've got to the summer already. I always look back and see what I've achieved this year so far, and I'm afraid solicitors are very slow, aren't they? You know, they've let a lot of people down with regards to stamp duty and getting the deal done by the 1st of April and all the rest of it. So where are we? Well, interest rates and inflation. Good news on the interest rates since last time. As predicted, they have come down. Not enough in my view. They're talking only about another 1, maybe 2 cuts this year, which is disappointing. We thought there might be 4, didn't we, or 5. This is due to inflation, and we predicted that inflation would be going up, and guess what? It is going up. National insurance has not really bitten yet either for employees. It will do. The only good news, I suppose, is that oil prices have come down slightly. So that is a mixed picture, I would say, on interest rates and inflation. Now, where does that leave the house sellers, the people, the residential market, which is so important to the UK's economy? It's vital, absolutely vital. Interest rates, like you said, haven't really moved much in the mortgage market. You know, it's probably similar to what it was 3 months ago. They say that the interest rates have already been priced in, which is just an excuse for not bringing them down in my view, but there we go. So what I've found with our agency and talking to other estate agents is that since the stamp duty level has gone up, it's got harder to sell houses. Most people are finding that across the property industry. The agents are starting to find it pretty tough. Now, on average, apparently, the average reduction from the asking price to a sale price is £13,000. That tells you all you really need to know about the market. So it's certainly a buyer's market. There's more properties on the market than this time last year, 13% more, and the most since 2012. So it's a buyer's market. So if you're looking to sell, you must be realistic on your asking price. You really have to be very realistic, I believe, on your asking price. Some experts, so-called experts, are saying the market has gone up, prices have gone up. That's a complete load of rubbish as I can see. I think up north things have easier to sell, probably because the level of stamp duty is less, because property on the whole is worth less up north than it is down south. Certainly down south it's a very tough gig at the moment. Let's see what happens in the next 3 months, but we've got the holiday season coming up, so I wouldn't hold your breath. If you get a decent offer for your house, take it. Let's move on to our favourite people, the house builders, the top 10 house builders in the UK that build 64% of the houses, who never build a house unless they have a reservation already for it. How wonderful that must be. Last year they only built 184,000 houses. This year they're talking about building 225,000 houses, way off the target of Angela Rayner's 300 odd thousand plus houses a year. So interestingly, they have still got signs out saying part exchange welcome on most sites. So that tells you something about the market. It's still tough. Prices in terms of construction prices are still going up. And of course, we've got the new safety levy coming up. Now that's to raise £3.3 billion to help with the recladding of these tower blocks and all the rest of it. Now that levy's not coming in until October 2026, and it will cost the average house builder between £5,000 and £20,000 per unit. So I think we can expect that to be put on the price, because these house builders, as you know, as I've said in the past, are very sharp. If you watch what the house builders do, if the property market starts to drop, they close sites straight away. They don't mess about. They are the ruthless side of the business. It may not seem that sometimes, but they are on the ball. They are like a sausage factory. They just churn these houses out one after the other. They know exactly to the pence how much it's going to cost to build a house, unlike the rest of us. So let's move on now to the small house builder stroke developer. Now, surprisingly, Angela Rayner is looking that she's going to be actually quite nice to us. She's talking about planning under 9 units to be decided by the planning officer, not the councillors who know absolutely nothing about planning or houses. Half them don't even know which way to look at the plan at a planning meeting. I promise you, it's unbelievable. So that's probably good news, I think, for most of us, that under 9 units, they're going to have the planning officer make that decision, which is, I think, great news. Between 9 and sort of 40 odd units, they're also going to support these developers and as well, which is also really good news. They're not going to have to be part of the new safety levy, which is even better news. And they're going to have environmental issues dealt with. Apparently, Angela Rayner has now decided that red-crested newts and bats are less important than people, which is wonderful. We're going to have to pay into an environmental fund, but so what? That's fine, as long as it doesn't stop and hold up developments like it has done in the past. So all that sort of thing, all that sort of information sounds good news. The big thing, of course, is we don't know when it's coming out, because there's all this talk, but actually what we all really need is to hear that Angela has agreed to guarantee 95% mortgages, because if they do that, and they're saying they're going to do, or they said they're going to do this last year, we haven't heard anything about it recently, but if they do that, then my goodness, that will make a difference to the housing market, and we need some help. Build costs keep rising, and if you're a small developer, you're probably paying 1% interest per month on your development. If these big house builders had to do the same, half of them would be out of business, I promise you. And the smaller developments are the engine room of the property industry. The big boys will always be okay. And I think, to be fair to Angela Rayner, she's identified the fact that, the smaller developers who in the 1970s were building probably 30% of the houses in the UK, we're now probably building about 5%. And she's realised this, and she apparently wants to support us, which is wonderful news. But the proof is in the pudding, and the devil's in the detail. So let's just see what happens on that score. Now let's talk about auctions. My great friend and top auctioneer, Brian Baxter. He's head of auctions at Auction House, the company that I used to be a director and shareholder of. Brian tells me that under 500,000 outside London is still quite strong. The market is still quite strong for properties under 500,000 outside London. There are less buyers bidding per unit, per house, but it's still a strong market. Over 500,000, it gets a bit sticky for them. So if you can push yourself to look at properties over 500,000, you'll get a much better deal, I think, than you will if you try and buy them for 100, 150,000 and so on. So if you can push those limits a little bit, I would do so. Always be careful in auctions. The question you want to know is why it's on the market, and it will probably have a problem. And the question you need to ask yourself, is that a problem I can solve? If you cannot solve that problem, do not buy it. Residential property investors. Well, the poor old landlord, as we know, has taken a hell of a hit from the Conservative Party and the Labour Party. However, there are a few signs of recovery. Someone asked me the other day on a panel, what do I think about buy-to-let making a comeback? I don't think it'll make a comeback this year, the buy-to-let market, because I don't think interest rates will drop far enough. But of course, all these things come round in a circle, and at some point, buy-to-let will be the hot topic once again, but not at the moment. However, you can sweat the asset more. There's a lot of landlords getting out, we understand that, but also there's other landlords coming into the market who are smarter perhaps than some of the older ones, like myself, for instance, who's got a large portfolio across the UK, which is all short old tenancies and all needs repairing regularly and all the rest of it. These younger whippersnappers are looking at sweating the assets much better than perhaps the older landlords have done in the past. And I'm trying to copy some of the younger ones in terms of working with the local authorities where, you know, they'll take a lease for 5 years. So you have no maintenance costs probably, you have no voids or anything else. Then we've got social housing companies doing the same. We've got assisted living companies doing the same as well. And then of course we've got, you know, Airbnb and all the rest of it. So there's lots of ways of sweating assets. And as a landlord now, I think you need to look outside the box and see ways in which you can get a better return, because let's be honest, 4, 5, 6% return is a load of rubbish, really. By the time you've paid your mortgage or actually, you know, repaired the building, paid the insurance, there's not much left in the kitty, is there? So we're all looking to up ourselves, up the ante a little bit on that. So there's opportunities definitely in the market for that. And finally, of course, what are the opportunities? The market, I believe, is tough for investors and developers alike. But a bit of blood on the street, as we call it, also means there's opportunities. However, I've looked at so many deals where even if I was given it for nothing, and I recently bought a tower block for £1, so I know what I'm talking about, even if I get offered it for nothing, sometimes it still doesn't work because the build costs and the other costs involved are too high and the sale figure is too low. With a Labour government, you normally get a lot of inflation and you normally get property inflation. But what's happening at the moment is that we're starting to get a bit of inflation, but it's not being reflected in the property market at all. And that's a problem for landlords and developers alike, because if you make a mistake on construction costs, for instance, there is no way of wallpapering over the cracks. You are totally exposed because there's no increase in inflation in terms of the end value. And that makes it a very tough life for all of us, because most of us end up paying more in building costs than we thought we would. And normally it takes longer to complete a project as well. We're all in the same boat, I promise you. And anybody who says they're not in that boat is probably lying to you. So there are opportunities out there, but be careful. Building costs continue to rise, in my opinion, and it is tough, but there's still deals to be had. I bought 2 or 3 deals in the last 2 or 3 months. Hopefully they're all good ones. Good luck to you all, and I'll speak to you again with the autumn update. Just to remind everybody, my 2-day comprehensive masterclasses on the 16th and 17th of June, Monday and Tuesday, Canary Wharf. If you're looking to pivot to another strategy in the property industry, looking to rinse out bigger profits, squeeze those assets harder, develop bigger, then this masterclass is for you.